Welcome to our Trade With Me event, where we want to jointly look into the market, what the charts are telling us, and what benefit we can take out of that. Go again. There you see my picture. For those of you who know me, that's a given. Else, my name is Thomas Barman. I'm the inventor of NeverLossTrading. And I just want to tell you here, as always, by the SEC rules, trading has their risk. What I show you here is not giving you financial advice or trading advice. I show you what the system gives us as opportunities of where we can find trading opportunities we pick and trade along with. And past performance cannot always be taken indicative of future results. So these are my legal disclaimer. I love it. Let's dive in. What we want to achieve tonight. Yeah, voice and image. Fine, alrighty, perfect, good. So what we want to dive in tonight is, first of all, a very little brief base principle thing of how NeverLossTrading works. Then we're going to look through key markets, for example, also the ES. Those here are assets which people contributed that they wanted to have a look at. And then we'll go look at a couple of the alerts as far as I could conclude them by now, because usually that takes me about 3 hours, starting at 4, going to 7 East, to put together the alerts that I sent out for the subscribers. And for those who start out with a NeverLossTrading program, they get it for free for 3 months when they NeverLossTrading, or for 1 month when they're with TradeColors.com. And so let's move ahead and let's make it exciting. I'm not going to make a long presentation, just showing base principles. The institutions, many private investors, they think they work against them. They work in our favor as long as we understand what they are doing, how they are acting, and how they can be seen on the chart. Who are those? Those are all the fund managers. Everybody who has a 1K or buys mutual funds, they're always those fund managers, and they have their pattern of what they're doing, how they invest the money of the people that give it to them. And also hedge funds, they have their way of dealing with the market. They just have a couple of other issues. And for you to be in a hedge fund, you need to be above $1 million net worth. But for you to trade better than any hedge fund, I wrote an article, a longer one on this one. Join NeverLossTrading, that's your opportunity, or start with TradeColors.com, an entry-level program. It'll bring you par to par and way ahead, because we have one big advantage as private investors. Timing. Yeah, we can enter and exit entire positions at one spot. If you own, let's say, 5 million shares of a company that is basically selling 6 million a day, it's hard to sell them all in one day. That would make a slump. And that's our advantage. We have the computers, the algorithms to spot these events and then take it from there and trade along with the directions the market take. Yeah, so who are those? We love the liquidity providers because, they make us sell. They give us private investors the unique opportunity that we are par to par with the big guys. Why? We have penny spreads. It is fabulous. And if we pick the right option, or the underlying with the right option, we also have minimal spreads on the options. So they make our life easy because they put us par to par with everybody. We like definitely the pro traders, yeah? So here a couple of the symbols. Goldman Sachs, JP Morgan, Morgan Stanley, Deutsche Bank, Barclays Bank of England, UBS, United Bank of Switzerland, Credit Suisse. Those are all those banks that make major moves because they have the fundamental department. They work it all up of why that would be important. They look for world politics. We can guess, but we can see on a chart what their interpretation is, and we take it and trade along with it. So with that said, let's move ahead. For everyone who wants to make money in the markets, that's a key way of going to the market, regardless if it's a supplementary income, so you have a different job, or you run a business, you want to build your retirement budget because that's where your savings are going for the day when you maybe no more be able to work, yeah, or you want to trade for a living or build the wealth of you and your family. Take the opportunity. Today's markets are ready for going. Trading is a wonderful thing if we know what we are doing in those markets. They give us opportunities that never been there before, because we as private investors, we can trade the markets to the upside and to the downside without any restrictions. We just have to find the right tools to do that in any account, and we just have to understand a couple of basic rules, and they put us on the spot to make us move. Yeah, so how does it work with NeverLossTrading? Our computers, they look, and the indicators that are developed, where is an institutional price move that moved the price of a stock out of the range to the upside here, for example. Then we have an approximator that calculates the SPOO. SPOO, that's the minimum expected price move, often underlying after institutional engagement in a direction. So that means here we calculate the SPOO from the entry, and then we know it's about time to get out. We trade more the momentum, but we can also trade the trend. But those momentum trades can be fabulous trades for us, bringing us in the right direction and giving us the wonderful day-by-day opportunity to participate for a short term in the market. We're often in the market 1 to 5 bars. So do we trade an hourly chart? It's 1 to 5 hours. Do we trade a daily chart? 1 to 5 days. A weekly, 1 to 5 weeks. So depending on what time frame we pick, that's our average time in the market. And then we have a new investment instrument. And the beauty for private investors, we have more trading opportunities than we have money. And so therefore we select them, we find them, we trade them here to the upside, or we trade them to the downside. And with the help of these algorithms, we are really having a wonderful opportunity to participate continuously in the market for meaningful trading distances. Yeah, so that's a short definition again of the SPOO. It's a speed measure here. So it measures the speed, the expanded price move per time observed that the price is going to move in direction after institutional engagement. Yeah, so if no institutional engagement, SPOO measure will be still there, but then it doesn't matter to us much. But when it's there, then it matters because that gives us the target. And every chart always has a point of risk. What's the maximum risk we should take? There's a red line on the chart, and we see that when we go through step by step, and that red line puts us in a position to know our risk and reward. And one key thing for everybody who already learned never loss trading, never, ever, ever risk more than 1.5 times your reward. Never, ever. Yeah, that's very important. You might say I only want to risk 10 cents to make $1. That might also be very risky because you might get stopped 10 times and then you lost your $1 and you're still not having a trade that you brought home. So it's the perfect balance between risk and reward to allow the price to move in the direction which we have worked out for making the money we deserve. Yeah, so that's how it looks on the chart. Yeah, so that, yeah, with our trading system, you have blue going up, red going down, and when blue and red mixes, we have purple. And when I talk about algorithmic trading, you'll have to think about the algorithm that you use every day, like Google. Yeah, you do a Google search. This is how NeverLossTrading works, and the alerts. We have big search engines here. Those search engines give us an idea of what's hot, and we trade where it's hot, or we fish where the fish are. That's the key thing in trading. When we know what's going on, we go there and we trade along with it. How do we know? We'll have all these seek finders, like in Google, you put your keyword in, you write NOS trading, you can't miss out. So first 10 pages, they're covered. Yeah, with all the articles and everything going on, they're covered. So if you write it in 2 words, there's somebody else from Russia who uses the word, and I just don't bother, because NeverLossTrading is trademark registered with the United States Patent and Trademark Office, but you know why to get into this. Yeah. So probability and evaluation, that's key, and we work with that tonight. Risk reward approximation, and then odds ratio. Yeah. So the odds on your side, that's how you trade. We can have really a unique opportunity. No casino in the world brings, but trading is fantastically entertaining, but it's also demanding on the individual. Yeah, I'll maybe next week do a second seminar where I refer to how you have to set yourself up as a trader, because it's hard. I work with real traders, and they have a whole setup of network. And you know who is the most important for them? Their risk manager. There is somebody who at a certain point comes at the desk and says, hey, Gary, I'll look at you. You violated rule number 8. If you want to continue working here, stick to that rule. You put too much in the market at that point in time. And that's also what we do. We help you to have position sizing, give you tools, and work in relation to the setup on the chart. Is it a home run setup? We give 4 lots. If it's an acceptable setup, we give 1 lot. If it's risky, you give half of a quarter lot. Don't put your money at risk. We're totally risk adverse in how we trade and how we go to market, but we want to take the opportunity when it's there. How do we take opportunities? That's the chart for Apple. Yeah, Apple for the recent days. And you see here, we have these indicators. There was earnings announcement, so therefore we usually stay out of the market. But you see our indicators already said, hey, we have bottom pressure to the upside. Even though that fell down hard, there's upside pressure. Then it realized, and we get our first target. So trade it to the upside. Next target, trade it to the downside. Next target, trade it to the upside. And also that realized that we have price thresholds spelled out on the chart. And with the spelled out price threshold, you know where to. The last candle was $8 and was in relation to 1.5% on cash. If you day trade Apple, that would be times 4. That would then be a 6% return on total margin considered. Yeah. So, and we have some coupling of waves, but we are not trading the way that the day has to be red and the 4-hour has to be red. So I already said here the major time frames, but there is some wave coupling between, like, for example, the weekly chart and the 4-hour chart. Yeah. So when the weekly chart, I put it here in green, makes an upslide move, the 4-hour chart makes one too and gives us a fantastic trading opportunity for shorter term, because in the weekly chart you would be in a signal between 1 and 5 weeks, and with the 4-hour chart between 1 and 4 hours, so you've been in for 3 days. So you can trade it with an option. You can take the opportunity from our long-term investor model, taking it at times of ambiguity, which we have right now because it's not so clear where the market is going from its high. So you take shorter bites out of the market and you trade it for the 4 hours. You see the amplitude of those waves are different. But anyhow, our computer makes it all with the gradient and all that. You don't have to worry about it. You have a signal. It says buy above a certain point, and that's how it's related, and that's how we find our opportunities. Everything is done for you. Yeah, the signal spells it out in a buy or sell signal. Yes, so that's with that said. So now let's dive a little bit into charts. Yeah, now we want to look at the individual charts and symbols you gave us, and so let's look at our first chart. That's the SPY. Yeah, market is the best to be measured on a SPY. I'll look in a second on the ES, but the SPY is unbeatable. Why? The SPY is stock. Yeah? The SPY, the ETF of the S&P 500, really has the stock. So you have the best appraisal because that thing is not that easy to manipulate because it relates to the real stock. In the ES, you have some manipulation going on, where some of the institutions with very little money can make major moves. But here in the SPY, we see the market. So let's see how our indicators told us. Yeah. So we came from that bottom. So here you see a sell signal, but we didn't worry about it because the next day was lower than that spelled out threshold. But then we had here our first buy signal. Yeah. Nice turnaround. That's the HF chart. Yeah. Volatility, buy signal, and wonderful came through. And here you see the red line. With that red line, we trail our stop if we trail. Yeah, if we don't trade all for the momentum. Yeah, so for example, we came up here. Here you see a sell signal, but you didn't worry about it because the next day didn't take the sell signal out, and so therefore there was no trade. But let's look at the very recent days. Here on 3/11, we had a sell signal. There was the one SPU move. It coincided with one of these major support lines. Did the market come there? Absolutely. So then we made that bottom, got our 317 buy signal, spelled it out in our report. What did the market do today? Yay. It went right and concluded that move. What's it going to do tomorrow? We don't know. We'll see if it breaks out of these long-term support and resistance zone. That's a new little toy that we added to us. It's tradable as a standalone, tradable as an add-on to the NeverLossTrading or trade color systems that gives you long-term support and resistance. And you see how nicely the price swivels about around that zone. And so here was our buy signal. So what do we do tomorrow? We'll see when we come out of this zone. Yeah. So for you, you're alert because we go real here. 18. Let me look. 18.6, 18.7. There we put an alert. Yeah, so that's how you make it here on that platform. So alert, we put it at the mark. 18.6. You see it here. If SPY is the mark, the mid price is between 188.06. Above that, then we create an alert. So that's now on here. So, and you can set the system up that you then get either SMS or mine just rings because I sit in front of the computer. And so with that, I'm able to see the alert and can act on it, because then it's a nice opportunity to go long. How long do we want to go? Next level of resistance, I told you tonight we go trade with me real 188.68. So you might say that's very little, but you know, if you already learned the NeverLossTrading Delta Force option trade, that's very beautiful. That's a nice option trade that you can realize. We only day trade, yeah. So you trade it and close it out. Why? Every day you keep it, you lose about 20% of its value, and that's so good on your account. But if you close it out the same day, so you might be in it for 60, 80 minutes, then it's that weekly option here. Yeah. So cool. So now we looked at the same chart with the ES and see what the market on the ES side is doing. Yeah, so that's also how I look at the market every night. You hear a couple of rings in the background. Those are the alerts that also alarm us throughout the day of the direction the market takes. There, a ring is for a down move. Oh, that's the down move here. Yeah? So you see the ES reopened and it didn't continue its path. Yeah, so it moved to the downside. I go a little closer. Yes. Yeah, so you see another sell signal, which says here is a volume differential sell signal in the opening hour right now, where we see some market pressure. When do we take the signal? When the market is done. That's a daily chart. I can go lower time frames. But you see the same continuation pattern. Look here, we had our sell signal. There was the first target, but also we knew on the ES, there's a second target down here. Now we talk money. If you went into the trade at 1863 and you took 2/3, yeah, let's say you only trade 3 contracts. You took 2/3 off at 1844. That is 19 points. That's the first $1,800 you made in that trade. And when you brought it all the way down to 1830, so that's 33 points. That's 33 points, $1,750. Yeah, 33 points half. Yeah, that you did. Yeah, this is a nice trade. Yeah, 2 portions out, 1 portion out. Yeah, so those are big moves with just 3 contracts. We're adding those 2 up. That would have been a really great big deal of trading it. Where was your stop? Pretty easy. Stop was here above the red line. Did you trail the stop? Yeah, when the red line came on. Yeah, so here you could trail it if you wanted to do that. I'll often just leave it up there. And then here goes the stop. Stop, was it infringed or challenged? Absolutely not. The price never got higher to challenge our stop, came to target. So now here we have a constellation where I would have been very careful. Why? Because opposite to this one, where you have an open space between key support lines, now we had the first red line marking. We have a resistance line right in front of us, and the market might hold it there. So therefore, good trade was here. Where was your stop? Therefore, we have that line. Stop was here below that line. And then again, you calculate, is my risk reward acceptable for giving me that trade? Yeah, maximum 1.5 times. And then you trade it against this one or close it out at the end of the candle. And this is where we are with the ES. Let's look at a couple of other markets that are very related. And I go futures first, and then I go to the individual. Let's look at the dollar. Yeah, because there's a lot of ambiguity in the dollar, because that shows that the market in all sides not clear. My system is a little slower tonight, but here we go with the dollar. Yeah, look at this dollar. So it halted. Yeah, so it came down. It had a couple of up moves, potentials. They never came through, so nobody had to worry about those up moves. But now where do we stand? We stand at the very low point. And for the US dollar market, when that US dollar goes above 80 cents, yeah, so that's our alert. Put those alerts in for you, because you want it ringing, binging, and be in a position to recognize when that comes again at the mark. 80, yeah, and give it a cent or a tick, so I give it 2 ticks, yeah, and then create the alert. So right now, there is the alert. When that alert is broke, yeah, 80-80 might be a good point, but we'll have to consider also 80-20 as a potential first reversal point. Yeah, so this is important. And there's another line on here which we call the Mo line that gives the essential for the months where the dollar goes. That's also an important one which we want to consider. 79.82. Yeah, that's one way you want to see. Yeah, that's 79.80. Yeah, when the price goes through this one, then you might have a bottom reversal because we came down hard for a long time, and all reference currencies to the US dollars definitely then moved up. This is why the euro is high. Yeah, and so here a key decision has to be made. When money flows out of the stock market, then the dollar usually moves to the upside. What's the other big deal? The CB. Yeah, what do our 30-year bonds telling us? Yeah. Let me give you a second here, and we saw here nice trades coming along here. So we had here short signal, but not confirmed. Yeah, next day didn't go lower, but then we came out here. We had our HF buy signal, buy bonds here at 132 and 11 seconds, and please trade bonds for 133.09. So these are basically $900. Yeah, that's a $900 move on that chart. Bing, $900 taken, home. Yeah, so that's how the system always works. It tells you enter, you compare, is my high-low difference or whether my stop goes, it would go underneath this line. Is that in relation to my target? Absolutely, here it is. The target is even bigger, so therefore we have a favorable trade setup. And we also have tools where you can approximate. It's a better version that I have out there right now from a couple of my subscribers testing, so that you can put in the numbers and then evaluate the situation and see how many lots the computer proposes. But computers are smart and very good in calculating. We need to take our eyes because the computer paints all those lines. They don't see him. Yeah, so that's going on CB. What else do we want to look at? What's on pressure? Yeah, so I show you a little bit of a report that we do every night for our HF day trading, and a big report with a lot of detail. I just take a look with you and say what securities are today on the scale where something is going on. We definitely it is our movement indicator, and we look at this. So the ES, absolutely, something will move tomorrow, hopefully, and therefore we will have it on. What else? Soybeans. We don't trade that every day, but let's look at the trade setup. So CS, soybeans, and so that's the nice thing, yeah, because when I propagate fish where the fish are, our alerts find where the market moves, and we can dedicate our forces to it. Yeah, so you don't have to look at 100 charts. You get a report dropped into your inbox, and then you say, "Whew, soybeans, never thought of this, but I feel like trade that." Yeah, if the market goes above 119 and 50, there would be the target. It's here, and it coincides with that, so that's fine. 149.99, and then it relates to a stop. Where would be the stop? You see here this line, that would basically indicate. So stop would be 1495. Yeah, so in that area there's the meaningful stop at the green line. And so this is how the system can be traded. Did it work before? That's always important. You need to look, do things work? Then they matter. Did that trade work on 224? Oh yeah. Yeah. Did that trade work? It was no trade because next day wasn't lower. Did that trade work? It was no trade, next day wasn't higher. But this trade worked. Go short here, trade it to its point. Oh, absolutely. 1-2 days later, you harvest it. So you might say, look, I'm not trading a full day of that underlying because I don't know how to trade it, what all implications can be in it. So therefore, let me make a little switch here. And we'll look also how you can see what's behind that with that platform, which is on Thinkorswim, where I put all the indicators. So you can go into the trade screen, and then you go into futures, and you look at the details here. I'll make that a little bit, yeah. So you can see, okay, that's the CS, And what does it relate to? I'll have it put that it puts the maintenance margin. Yeah. So here you see, one tick of the soybeans is $12.50, and I need to have a maintenance margin if I hold a position overnight of $3,375. So yeah, one tick $12.50, $3,325. And so this is how you then can measure what holding power you need, and your broker, whomever you use, might give you a better deal for if you put a bracket order for what you have to have in your account for it. I just wanted to show you on the maintenance margin what is required for doing also a longer term. The system give you trades that bring you home. Does it always work? It also has a failure here and there. Absolutely, but I can show you with the trades that we put on tonight, high probability trading. Let's play a little. Now, major time frames. I don't want to trade the whole day on futures. I want to trade hourly. And we come to Google and Apple. I'll take the time. I hope I can inspire you to stay with me, and then I'll take the time and I go through the individual stocks that you put in here. Okay, so we'll have the system coming up, but something halted it. Yeah, so let me have the data stream coming in. So now that's how it looks when you have something on the radar. Look here, came out of the purple zone, but this one didn't give us really an entry. On this one, the entry was here. That one was taken out. But on the hourly chart, then we had no signal here. Well, we had a signal here. Can we trade shorter time frames? Yeah, you can. We sometimes also trade for 10 minutes. That's the lowest time frame our traders take. You can take 5 minutes, but I'll have to tell you, when you understand and you once work with the institutions, their computers, they look at the stop levels, 5-minute time frames, and on 1-minute time frames, and they change those stops. This is why you always get taken out. And when you take too short time frames, then your trading will suffer because you'll always be stopped. So 10 minutes, did it work? So we know one tick is 12.50. Yeah, so here we have it moved from 13.75 to 16.75. That's 3 points that it moved here. And so you see here it concludes its way. Also, this one was not taken out. Here is taking to the upside. That was a downside trade taken. This one was not. This one was a failure. Yeah. But I would not have taken it. That's what you learn, why to take the second on the down. But this one came nicely home, and so this. Let's count. 1 good one, 2 good one, 1 bad one. Not 3 good ones, 4 good ones, 5 good ones. 5 good ones, 1 bad one. That's high probability trading. Yeah, just on that example. But we don't want to trade too much of the soya beans. Let's look how that looks at Google. Yeah, and we look at the moment I can type it right, we'll get it in, because that was on the list for tonight. They wanted us to look at, and that goes through Google, Apple, and a couple of others were on there. Yeah, so let's look at Google. So we'll come from low time frame. Yeah, and you might say, why would I trade such a low time frame? You don't have to. I'll just tell you how the system works bottom up. So there was not much coming through, because the trades that you see on the chart in this afternoon today, they weren't going through because they were not triggered. In the morning, we came out with a little breakout. It was taken out later on the 5th candle. You learn that also. These colors here, yeah, of these candles, you see also they're colored blue when there's an up sequence. And the 5th candle is always a decisive candle, making usually either a breakout or a breakdown. So here we have a breakout. So you see here another 5 candle sequence, breakdown. Yeah, so that's how it works. So Google, let's go Google on the hour. Yeah, so 10 minutes is a little short time frame, but if you want to trade a Delta Force option, it's not a bad time frame to take. Yeah, we have traders that are very successful trading options on a 10-minute time frame, but also you can do that on the hourly. Yeah, or let me do that a very little bit smaller so that you can see it well. So look, here we came in the morning, Google taken out, yeah, and we had our target set here. So if we traded Google 1190 to 1197.90, so at $7.90, if you pick the right option, that makes you a hammer trade. I tell you, that makes you a hammer trade you'll bring home, because you are in a weekly option. Weekly options don't cost you much. Yeah. So let me go into the trade screen. This one I don't want. I want all products. I do Google. I always have a lot on my screen because these were things I traded today. So then, yeah, here you go in there, and you see a weekly option. We're out of the money. I can't tell you all the total way of how it works right now. It would take too much time. But you will have an option of, let's say we pick this one, $5, and it has a delta 40. So the price moved up basically $8. 8 times 4 is $3.20 over $5 that you invested. That's about a 6% return on your money, I would say. That's all doable with a high probability chart if you learn to pick the right instruments. And what was your risk? Look, when you buy a $5 option out of the money, it moves a spool against you. You risk about maximum half of that, mostly the delta, so you risk about 40%. So was that a good thing to do? A trade that gives you 60 return on a 40% risk? Yeah, we take it every day. Yeah, so now let's look at the next time frame that we like 4 hours. It's a fantastic time frame. Institutions love to do it, and a lot of those hedge fund managers, you know, they are not so risk adverse. And you learn it from me. You learn it with the signals much better. But look here, from left to right. I'll have to move that a little. Yeah. So from left to right, we're coming here out of the zone of ambiguity into Google. What was that? Short signal. If you took it, were in for 1 day, was your stop challenge? Yeah, so that was a wonderful trade on the 4-hour chart. So basically, you went in the morning, you went out in the morning of the next day. So 2 days later, morning signal. Yeah, in, out. Yeah, when did you go out? Next day in the morning is at that dot where you set it, or you'll bring it in the afternoon. That's a choice that we learn together. So how many good trades? Yeah, even that one was good. You wouldn't know that there's a purple zone, but let's take it out there. 1 good trade, 2 good trades, 3 good trades. What are we trading for? Yeah, so let's look here. 95.34 to 208. 23, 95.08. We're talking $13. If you put that again on a $5 option, $13 times delta 40. That is $4.90 on a $5 option. That close to doubles your money. Yeah, and this is possible. Look, these are signals. They are on that chart. These are signals. The computer triggers. This is not PowerPoint. Therefore, in a lot of presentations, I just go live to give you an opportunity, and also tonight to tell you you have to trade the right time frames. The daily chart's not always the right time frame. 4 hours power. Put that in your mind here. 4 hours power. Yeah, on a daily time frame. That's how it looked for Google. Yeah, so put that on your computer. 4 hours my power. You have to look at 1 o'clock. If the morning candle was 1 o'clock east, yeah, I don't know where everybody is from here, so I see a couple on my map here, even from France and Portugal. So, when I talk time, it's always Eastern time. But also here, Google was losing. Yeah, it produced its expected move, and you might say, my God, look, if that share if I trade this. It's going to cost me an arm and a leg because there's a share for $1,200. Again, when you learn option trading, what was one option trade worth? $5 times 100, so you're $500 invested. A share where the value is already double, so you control 100 shares times $1,200. So that's $12,000 share value you control with a hold power of $500. That's not too bad, yeah. So your risk is limited, and your upside is fantastic. Look here, if you realized it, 1169 to it's not already there, so tomorrow morning might get there, or when you took it here to that's where I would have taken. There is a resistance line here. I'll have to put the ticker right on that yellow line here, 1208. Yeah, so that's 97, 1208. That's $21 times again delta 40. That is $8 and change, added to a $5 investment. That's a return, yeah, sizable and limited risk. Do I trade other possibilities too, like spreads? I know them inside out. I can call myself a little specialist in options, but I tell you, you'll need to trade as a retail trader good positions with limited risk and huge upsides. If you take a spread, you limit your upside. If you take a spread, you limit your upside. Always. And the spread realizes most of its value in the last week. So you have a spread that is 80 days out or 60 days out. It takes forever to give you money, but you might say, I'll take my profit more early, but be careful with it. Look, a spread, for example, a good spread gives you $2.20 on a $2.80 risk, yeah, $5 spread. So when you, after a week in that position, your stock made a move in the right direction you wanted it to go, and your contribution will be on that spread, I'd say 80 cents. Yeah. So you put $2.80 as a risk and you make 80 cents. If you get one time caught in such a correlation, you need to be above 75% right to make money. That's difficult. That's difficult because you put your threshold for your break even far too high with those type trades. Let the other institutions make it. You take one part of trade, yeah, on the entry or on the exit. You make it with put and calls. You have huge upside opportunities when you learn the right way to trade options, and you have a limited risk. Yeah, the other trades are doable, but better trades are big signals. Trade them through, and you know your risk. On a $5 option, you'll have about here delta 40. You'll have about also maybe a 50% risk, so $2.50 is your risk. But when you strive for an $8 reward, that's a fantastic setup, home run setup. So you can put a couple of more than just one contract. And your question might be, yeah, is there enough out there? Because is there enough contracts? And that's what you learn with me too. You learn volume. Yeah. So which one did we pick? Yeah, today 1137 options got exchanged on that volume. 1137. So that would have taken 10 of your options. Your $5,000 would just be serviced in a second. Or if you put $50,000 in, you bring 100. Yet the market was thick enough for 100. And on the other side, there was an additional open interest for 2,000 at that specific price. Yeah, so there's enough out there if you pick the right options to trade that. Let's look the next one up. Apple was on the list. AAPL. Yeah, Apple, fantastic trade. Not only that they got good products, but that's also important. Don't fall in love with your trade. You trade it to the upside or the downside, whatever it is. It comes on the list, we trade it. Yeah. Yeah, so we saw Apple on the chart. I showed you that one prior. Yeah. So how it was traded. Yeah. So the last trade was here, came through here at 311. There was no trade now. Why no trade? Ambiguity. It's not clear where Apple is going. Yeah, they jiggle it. Yeah, the institutions they work it out. You saw here they trade a little higher, institutional volume. Yeah, but then they trade a little lower. As long as that is on there, that's the hardest thing for a retail trader who doesn't have that purple zone on to recognize when it's a bad trade, because in these purple zones usually the stops get taken. Yeah, those are bad zones. That's why I developed the indicator, because from bar one, when the purple zone opens, oh, it's a purple zone. Yeah, I have to tighten my seatbelt. If I'm in a trade, I better try to, with a fishing order, to get out. What's a fishing order? Yeah, you say, okay, that was my goal. I first put my goal fishing order in, and I try to tighten up my stop. Yeah, but I put a fishing order out there. I want to get out where the computer calculated where my spool move was. So let's move down. Half day Apple. That sounds good. Half day Apple. Alrighty, here we go. It just takes a second to load, and then we'll see on a half day perspective. Did we get far? No. Purple zone. Buy signal not confirmed. Buy signal not confirmed. Not much on the hour. Yeah, I want to go through a couple of them so that we can add more to it. And if you have a specific instrument you want to look at, tell me. I'll take it on. This is nothing to hide here. we want to trade with the institutional money moves and identify them on the chart. So you see here, for example, that's what we do every night. I scan the last hour. It's not that easy set. I had to write a big program, and I obtained data from exchanges direct to find those, because it's not how volume and everything is reported. The chart makes it, but you have to find the opportunity out of 40,000. Which one had cyan volume? Everything is cyan on the chart here. NeverLossTrading is something special. Something's going on. Yeah, so big cyan volume. Why do institutions load up in the last hour? Because thing goes higher. So boom, that's what it did next morning. So, and there's a morning trade on that, because every morning I send out basically a pressure report which says what's on the spot that morning Apple was on. And so if you took it from and traded it that in that new zone, that's a nice ping pong you can make. Look at this: up, down, down, up, down. Puts calls, and you bring them home on an hourly basis. So every move is between 526 and 520. It's $4. That's fantastic trades. Yeah. So here recently we had no trade. Yeah, on the hour. So what else did we have on Priceline? That's one that's a little thinner. So if you trade that, it's a good instrument, but it's thinner, because it has less exchange throughout the day, so less institutional involvement in comparison to an Apple, which has about 40 times the volume. Yeah, so this we always need to consider. Does the system work? Oh, absolutely. Yeah. Let me go a little to the left. So what time frame do we have on? 1 hour chart. So look, there's a purple zone signal up there too. So coming out of the purple zone, ambiguity is over. What do institutions make a move? And that thing's called a light tower. Yeah? Therefore, it has that cyan dot. The light tower stands out tall and points in direction down. And here you see, if you really take it on and take a portion of your trade, yeah, so like you trade for the momentum, 2/3 of your portion, and you'll take the other until it ends. And it ends in a light tower. So on the low, that's always the pattern. Light tower start, light tower end. Yeah, so that would have been a wonderful trade on the first portion, 1308 to 13.2, $6. Again, with options, when you can do that, it's fabulous and wonderful. There's another portion that you can take in the trade. Then make a turnaround trade. 9 o'clock, 317, entry. There was your exit of the first portion, or you'll take it till it ends. Yeah. So often we just take the momentum, because what else do you want to make? 2-3 trades like that a day on returns. They're wonderful, but you also have to gauge your risk, and your risk parameters that are all teach in the mentorship. How does a mentorship work? A mentorship works usually that we work on NeverLossTrading 2 hours, 2 hours, 2 hours, 2 hours. There's TradeColors.com that has a total mentorship participation time of 4 hours, which we usually do an hour and a half, and an hour, because it's a lower scale entry product. It's a good product too. Yeah, for if you want to start slow and easy, because I allow, if you upgrade, every dollar you spend on TradeColors.com, I will acknowledge and deduct from the tuition for the NeverLossTrading program. You see here, did that worry us here? 1500, extreme volume? No. Somebody bought, somebody sold, next day showed it. Yeah, was no need to do anything. We had no trade. Did that trade worry us? No, next candle didn't go lower. So that's on Priceline on the hour. Let's look on the day. How do I look on the day? My favorite relation that I found most telling, 6 months daily. Not 12 months, 6 months daily. I could give you more and more background on that one, but doesn't matter. You don't need to look so much back. What did we trade? So coming up here, entry level signal, yeah, and so that's the trailing stop if you trailed it up. So that was a big move. Yeah. This one even came through. Yeah. So entry was here, exit was there, bang. Yeah. 2, 1, 2. If you take the momentum, 3 good trades. This one came not through. This one came through, took a little to come home. I would have taken that trade, even though it is positive on its result. Why? Risk reward is not okay. Yeah. Too little to trade for, too much to risk. Yeah. The stop would be right below that little line. Too much to risk, too little to trade for. no trade. Why? We have lots of trading opportunities with these reports that we send out every night. You'll have them catered to you, and then you know where's the market hot. But the systems, the signals have to be confirmed. Was that short a good one? I'd say so. Yeah, so now we had a long signal, and today, unfortunately, didn't tick it out. So there was no reason to trade price line today. So then we had JP Morgan on the list, JPM. It takes a moment to upload. Yeah, so let's look at this one. And actually, there is a couple of different scans that we do. That's on our list for tonight, as far as I got the list finished, as a potential bullish cup up move. So how does the system work? So let's take the last sequence. Yeah. So here you had a short signal. You took it. Yeah, it took a little, 1, 2, 3, 4 days. Yeah, to come home. And you see how the laser sharp trading is coming. Yeah, there at that point, and that's a thing. 65% of the trades after one spool revert. So if you wait for the next spool, then it's going to be difficult. I put on YouTube high probability trading thing where I explain that. So I don't want to go through that all today. Look at YouTube high probability trading on the NeverLossTrading channel. I explain that. I want the retail trader to succeed. And it takes a lot of knowledge. You have no risk manager. I have no risk manager. We sit home. It's not that we can say our spouse, significant other, is the risk manager here that tell us you should have taken care of it. But you need to be your own risk manager. You need to see what am I doing to be able to stay a trader so that I don't risk my account. When do I have a home run set up? That's a home run set up. Yeah, I would have taken this any time, but I would have not traded it to that one here. Here was the exit. And risk reward, okay, yeah. Purple zone, do we trade there? No, except we're in a trade and tighten our belts to get it home. Boom. Purple zone breakout, target. 1, 2 days in the trade, home. Reversal. Downside move. Yeah, target. Got it. Downside move, target. Yeah, so how many good trades? 1, 2, 3, 4, 5. This one had no failure. It's not 100%. The NeverLossTrading word came from something different. When I set up the company in 2008, I wanted to give the retail trader an opportunity to repair trades, in particular in stocks, within adding options without adding any money to them if something goes wrong. That's a specialty I wanted to add, and we have that. Those who learn and who focus on it, they get that. What does it mean to focus on it? If you come to me and you say, I only want to trade the ES, work with me. I'll do that. I'll give you still the full-blown introduction as papers, but then we work 20 hours on how to trade the ES on different time frames. But if you're open-minded and you'd say, hey, I want to trade the ES, but longer term I'm open to have spider options in addition, and with the ES I can hedge it, yeah, if something goes wrong overnight, because then I take the opposite position in the future. And when I'm long in the SPY, then I'm both sides leveraged. I show you all of how that works. Yeah, so that's part of the program. Or you say I'm very open-minded, I want to learn it all. Wonderful. You receive a 200-page documentation. You receive individual videos. Usually I work one-on-one, very rarely in small groups, because the one wants to trade cattle and random length lumber, the next one gold and crude oil, and the next is only stocks. Yeah, so that's perfectly fine. But anyhow, you will have the access to the documentation. It's electronic. So the good thing to an electronic book is you hit in, I want to see 30-year bond. So you put the word 30-year bonds and juk, it just drops down where you want to see the 30-year bond. So that's on JP Morgan. We're looking at that. So I'll need to jump back to my presentation, because there at one point I put the stocks to look at. Yeah, so we had this Amazon, Priceline I did, JP Morgan. Amazon I did not. Tesla, Amazon, Netflix. Alrighty, so now let's look at Netflix. And if you want to add a symbol, just type it in the box. I'm looking at it, yeah? So it should be as interactive what we do here as possible, yeah? Therefore, we have the chat box and can go live. So, yep, there's a lot wiggle here. Yeah, Netflix. Wonderful product, yeah? Prog out here to the upside. Let me go take that sequence. Yeah, upside trade, supported, home. Yeah, 1, 2, 3, 4, 5. That took 6 bars. Yeah, so then this one was not. This one was confirmed. Next candle, home. This one was confirmed, home in 1 day. There is a short, not confirmed. There is a short that was confirmed and came through. Risk reward on this one is doubtful. Yeah, but there's a second part to it. If you took it on that purple, so you're still in the trade and you wait, there would be 412.50 would be your short target. How is it tradable on a shorter time frame? Oh, you know, there's traders that take it on the 10 minutes because Netflix works perfectly on it with the NeverLossTrading Delta Force option concept. You will pick the right option. You'll be very happy to have the opportunity when it arises on that chart. Today night I focused on the HF chart. I have other setups, but the HF chart gives us most trading opportunities. So let's look. Yeah, perfect setup here. Out of the purple zone, short. Yeah, so there was your short. Was it acknowledged? Absolutely. And where was the target? Target was met. There you entered your trade, 10, 20, 30, 40, 50. So an hour later, you had made your money. Was the risk reward okay? Oh, I bet. Look, that little risk you take because you stops up here and that reward. So you have 3 times the reward. Home run setup. Home run setup. And I know a trader who made good on this one with NeverLossTrading, and congratulations to your good trading. Yeah. So recently, then in the afternoon, there was a reversal. If you took it, brought you home, and then the rest of the day was right now going through a longer time frame because you know 10 minutes is not for everybody. 1 hour. Let's look at what the 1 hour chart does on an intraday time frame and how it traded us and if it came home. So end of purple zone. I need to go a little higher to make you see the signal here, but not acknowledged. So on the hour we had this trade and it came home here. Yeah, it just pointed a ticky below, above the low. Yeah, 61, the low was 50, but at 61 you took out your trade if you shorted this one. And what we also will work on, how can the retail trader work short protected? I show you this one because a lot of people are scared with shorts. And so don't worry about it, even when you do it out of your margin account. I show you how you go short protected. If you short the stock, I'll show you how you do that protected in a very simple way and manner with an easy way of having it. And you'll have a risk on a $420 stock of $5. That's your risk. And you don't lose the $5. The risk, honestly, on that is $3. That's how far you can reduce your risk. But then when you can see your reward, then you can put it in correlation. But we'll have to work on that through the mentorships. Then you will see it. We go step by step. That's all documented as well. So if you say, I want to work that through again, you don't have to watch the 2-hour video, but you get as an individual video because your recording made to your needs will be made accessible to you only. So it's not going to be on YouTube so they don't hear the questions. And it's not a webinar. We'll have an online meeting then. You ask your questions. You get everything clarified. So that's how the system works. Yeah, so that was Netflix. Oops. Let me go and look at Tesla. Did I do that yet? I don't think so. TSLA. Yeah, so come from the hour. Let's look recently. This was actually a trade. Yeah, so you see here. How do I know it's a trade? Look, 237.24. Let's put and the candle high here was 237.49. Yeah, so 24. I would put 10 cents on it to take the trade. So 237.34. It got ticked out in the next candle within having a high of 237.49. How do you enter your trade? Depending on the platform you want to use. And the good thing is with the platform I put the software on, you have access for free to all US exchanges. You can execute your orders on any given other platform because you, depending on where you have the best rates, best commissions, and where you have your money. Trade with what you're most comfortable with. With the system here, you see what you can achieve. Yeah. So and there you put your order. Yeah, wouldn't be a hard order to put it here to say this is where I buy. Yeah, let's say what we have here, 100 stock of Tesla, and when the price doesn't get there, you will not be filled. And when then you know, okay, I can also do that long and short protected, so I can minimize my risk and I can maximize my opportunity within adding two components together. You're well on. You're well on. Or you might say, oh, I trade out of an IRA. When we go short, we make it with puts. That's no problem. We'll go short and long in any given account within always limited risk and positive rewards. Yeah, so that was Tesla. I'll need to jump in again on this one. Then we had QQQs. Yeah, it's a good product too. The NASDAQ, the ETF, we're coming from the top down. So I take the 6 months daily. And we look what our system was telling us recently. And if it gave us good trades. Yeah, so I'll take the shortest time frame here. And I'll look if we got good trades here. Yeah, so we're in a daily perspective. Yeah, we purple zone. And now you see why we have that purple zone. Look what swings we have to the up and the downside. And this is the killer for our stops. This is why I developed it. I developed it to know how does it work. Don't worry about it. It's a lot of mathematical wave models. Does it work? Yeah, you don't want to be in a trade in there. Even when you had the signal spelled out, you don't want to be in there because where would you want to put your stop? Look what stop distance it requires in all directions to get clear. So you know when the purple zone is there, this is usually where everybody loses their shirts, and you're not going to be in it because you know about the purple zone. So here, for example, this candle got you a short. This acknowledged it, yeah, ticked lower. So you were supposed to go short. But here, at that point in time, after the one spool move at 89.08, you were supposed to take your profit. So what's the low of that candle? 88.87. 89.04 was your target. So absolutely your target was reached. You get out. Yeah, this candle looked different throughout the day. It opened here. It at one point in time was all red candle down here, and then it's wonderful because if you have a put and a volatility comes in, what's happening? The value of your put gets added on. Yeah, Vega adds to the put, and so therefore you make more profits. Put trading is fantastic to the downside. A lot of people say these and these and that, but why do they have the long-term perspective? They want to hold an option for 30 days, and for 30 days nobody knows where the market is. Nobody. But here we know with the pressure model, and with a good probability, always high probability trading with a high probability, we'll see where the market is going to be in the next couple of days. So let's look left to right. Trade, yeah, home. 1 day in the trade. Trade, no, yeah. Next day candle is not higher. Trade, home. 2 trades, yeah. This one was a trade. This one was a trade. No trade. 3 trades. 3 good trades, and then we were in ambiguity zone. But isn't that a wonderful thing if you can compound your interest and you take your trades one after the other? The sell ad was stopped out, correct? No. Yeah, it could have been stopped out, but Helio, the thing is with the option trading, yeah, it could have been stopped out. This is true. This one is a challenge. With the option trading, you are putting a related stop because you can't just put an option stop. That's also important. Never put a stop on your option. You will get stopped out. Why? Your stop will be seen on the market, and the market maker is going to take you out. With the option, you have to put your alert. And when your alert takes you, then it's taken out. Yeah, the QQQ is not an instrument I normally trade because when you see here, you need to buy a lot of options. So let's go and trade it. Yeah, QQQ. Yeah, so now we'll look at the QQQ and make the trade grid go away here. Yeah, so on the QQQ it accumulates. Yeah, so in day trading, look, an option is worth 40 cents. So if you want to put power behind it, you have to buy a lot of options, and that's not easy depending on what you have to pay at commissions to enter the trade and exit the trade. What's an average good market value? What people pay if they have a per contract commission $1.50. So you have to buy 100, so you already have at least, yeah. So what does 100 option trades cost you? $4,000, but you have $300 in, and you have 100. You have 150 in and 150 out with that trade, so you have already $300 just commission. Then you add a little slippage, yeah, bid ask spread 2 cents times 10,000 shares you control. That's another $100. So just between commissions and spread, you sacrificed $300 to $500. That's a lot of money. So therefore, I don't trade these little things here because we have to buy too many. Does the market have enough volume? Absolutely. Look, 13,000 got exchanged. But this is also what you learn in the mentorship, to put your money behind meaningful things. Yeah. Not, imagine you per trade, there's 250 trading days a year. Let's say 200, and it's easier, and you bank $500 between commission and slippage. Yeah, 200 times 500. That is a fantastic $10,000 commission that you just could have in your account instead of throwing it on a tool which is not worthwhile to trade heavy on the option side. Even so, the options are splendid, penny spreads and humongous volumes. It is very costly for us who pay commission to get in and out of that. Can you reduce commission? Yeah, but not every broker is giving us fantastic commissions on this one. So let's look what else I had on the chart slide as well. So I'm through that list that you wanted to see. Is there another symbol or something else you want to look at? Because else I give you a little tie-up binder for tonight. So is there another symbol you want to look at? Then type it in the little chat box. Yeah, I hope I didn't bore you while I was showing. If that's not the case, then let me jump a little bit on the tie up for tonight. So how does it all work? If not already part of it, features 3 different investment instruments and programs, mentorships here. They go for those prices. Retail, Trade Colors is on sale right now with a 20% discount. How does Trade Colors work? That's the question I had prior from somebody. Let me jump into here and the chart, and then I go ahead here and we'll go and look how Trade Colors works. Yeah, so this is how Trade Colors works. I have now a chart for gold on it. Let's make it a little bigger. Yeah, so you count 1, 2 gives a sequence. Yeah, 1, 2 blue gives a sequence. So you're ready to go long when the high of the next candle is taken out. Not taken out, not taken out, not taken out. Next candle doesn't take out the high. This takes out the high. Boom. Nice trade. Yeah, so we're talking money that looks minuscule, but that's $460 a move. Yeah, because the approximator up here gives you always the move for gold. What's your margin requirement? Overnight margin is about $8,000, $7,995 for gold right now. But your broker might give you a different day trading margin on this one. Yeah, so we are looking right now at 4-hour chart. Yeah. So next sequence starts 1, 2 taken out. Oh yeah, big time. Look here, the high was 1350, and if you took it for the SPOO or you took it out here at 1355, that's $520 move. Or you trail it and you go as long as it's SPOO and not the second red candle comes up, then you're still in the trade. This is the second red candle only when the low gets taken out, so you would be still in the trade, and then you'll take it out. I'll work with you how far the SPOO move can go or the approximated move can go on here. So short there, 1, 2. Did the next candle take out the low? Absolutely. So also here you have a high probability trading system. Does it only work for gold? No, absolutely not. Let's look at Google and see the same sequence here. 1, 2, low is taken out, boom. And that's a budget system for 1997. And when you want to upgrade later, that should give you a real good opportunity. Yeah, so 1, 2, did it get taken out? Yeah, how much did we trade for? 1196 to 1210. Is all the option stuff involved? No. This is basically a base introduction system. There is a little bit of option stuff, not all of it, but there's a little option introduction. I'll show you. I want to make you successful. It's not that I just want to make money of you. I want to make everybody a successful trader. Whoever worked with me, everybody knows that I'm there, that I'm helping, that I look, the position sizing, that everything goes in the right direction for the traders, because that's what I take pride in, to make everybody a successful trader or investor. Does it always work? It works high probable as always. Yeah, when you catch some of those sequences, yeah, so 1, 2, high taken out, yeah, and then you know what you're trading for. Here on Google, it's $11. That's nice trade. Is it only Google? How about Apple? Yeah, it gives you a really nice entry tool that I developed for the entry-level algorithmic trader. And also you get a 60-page documentation, so the trades are documented. If you are a day trader, I have a specific program where we work with you as a day trader. If you are rather a swing trader, you want to trade stocks, the same. For the first months, you get all your I have to write it right, AAPL. That's what my fingers were too fast. Yeah, so here, let's look at the last sequence. Yeah, so 1, 2 taken out, home, 1, 2, that's a trade. Yeah, and here the approximator gives you the idea of where you traded to. So 1, 2 not taken out, this one is taken out, you can take that. Yeah, so again, then there is a new sequence. New sequence, the red starts, 1, 2 not taken out, but this one is then on a high. It gives you the opportunities. It's not as precise. It doesn't have all the details, all the price break points. We work together where they are and how you find them on the chart. But that's a very nice entry-level model that you can take into the world of algorithmic and precise trading. And as said before, it allows you for upgrades. So I have here by accident for our time frame. How does it work on a day? Yeah, if you want to trade. Yeah, so red sequence ends, blue sequence starts, blue sequence in it, and to trade it. Red, red, in it to trade it. Blue, blue, also. There's enough space to bring it home. What are we currently trading for? On a daily approximation is $6. Yeah, so it's a $6 move the approximator gives you after 2 candle sequence. So we have Apple on a 2 candle sequence now. 1, 2, so mark high. That is the alert that we set, and we put it on a mark. That's the mid-range above that one, and there is the alert. Yeah, it appears now on the screen here. And so when that alert is taken, there's a $6 opportunity. If you already trade an option on it, then you can see with your delta of how much is in it. But that's all doable. But you would see here, for example, I would say at that level here, be careful. Yeah, be careful what you do. Yeah, because here is your next level of resistance. The other systems, they paint that all on the chart, so you see it here. You'll have to make it by hand. Can't put it all into an entry-level system, but I definitely get you started with this one so that you have clear orientation points on the market, and so that's another market that you can take. Yeah, so and that's a little introduction on this one. Does it work on something like Spider? Yeah, look, it takes its algorithm as always. You saw it here. We had a red sequence, normal taken out, and then that blue sequence, yeah, 1, 2, and there we were blue. New blue sequence starting, getting to the upside. Yeah, new blue sequence starting, turning to the upside. And you see here, what are we trading for? $1.84. That relates to about 18 SPX points. Yeah, so and again here on that sequence, we have an up sequence. If that high is taken out, then it would be interesting. How is it for the futures trader? Works there too. Yeah, so the approximation is always there. And the approximation is different bar by bar. So that's a dynamic figure that's calculated. It's bar by bar. So here we have similar, but now we haven't taken out that high. So where would be turning points? I put them here because here we have to do it by hand. Yeah, so that's about where a market turning point is. So if you trade that up there, it's a lot of space between 63 and 80. There I would take my, a little bit underneath that line, I would take my profits if that thing is validated. Yeah. So again, those are the different offers that I wanted to show you tonight. It has many dimensions, what we do in NeverLossTrading with you, and it's really made for you, giving you concepts. Trading plan, it's important. I try even on the entry-level system work trading plan with you that you don't waste your money in the market. The trading plan is like a business plan, but you have to hold yourself accountable for it, but we make it. Depending what your trade stocks, this, that, we look at minimum trades, how to put a plan together, so what you want to attain, achieve a day, and we'll work that you get your returns and your strategies and all of that. I've put it here in a small overview, so you know your entries, your exits, your probabilities at your trades, different strategies with stocks, options, futures, forex, whatever you desire. It's all in the package. If you want to select only a few because you say I'm not interested in forex, no doubt about it, we leave that aside. Yeah, make you the business plan. Position sizing will be a very essential part of it. That's what everybody needs in the retail side. What's a home run setup? Give it more. What is a risky setup? Give it very little, or don't trade it. Don't put your money at risk. What for? Yeah, and this is also what not most of us, we all come from a different profession. We've not been traders from day one, and that's the tough thing to do, because we used to go to work, and when we not traded, we feel we worked nothing. But not trading is important. When there's no signal, you don't trade. And don't just trade one instrument if possible. It's good. Some instruments are tradable every day, but fish where the fish are. Sometimes crude oil is hot and it's a great instrument, but after the day it's boring. Good, my vast database has been updated. That's what I needed to know, yeah? So then you know what to trade for day trader, swing trader, long-term investor. Get the software, the hours, and the 6 months mentorship. That means you can send me your trades. I'll give reference with you. I want to really help you on the horse with all I'm doing, so that your trading comes into be nicely profitable and easy. If you don't want all those elements, I'm not going to bother you. Then you'll take it easy. I have people after a very short period, they get it and they fly with it and they're happy. You have to find yet the first one complaining, yeah. And so therefore there's a lot in that package. If you want to be part of this one, I skip over it. Shoot me an email. I'd be happy to also come together with you and we look at the instruments that you really want to trade. Or you be part of it within signing up for our alerts. As said, the alerts come out every night. Basically, I commit to 3 times a week, but mostly I do them every day. And then you see, okay, what's on swing points? Yeah, so here's an example. Yeah, these are alerts for tomorrow. Would be too hard to explain. I just want to give you a little gist. Or if you're in the program for trade colors, so those are trade color signals. Yeah, I'll also have to finish that. But those are trade color signals. And you see here on the side with the approximation, yeah. So this is about 2.7 per day with J and J at 1.2. So you see a return on investment based on cash. If you use margin, you'll take it double. Yeah, so that's a base return on cash on here. Yeah, so that's for the trade colors continuation pattern. Those were stocks out of the S&P 100 and the NASDAQ 100. Actually, only 20 stocks overlap. There's 180 stocks. If you want to look at all of those, find your trades. That's a tough thing to do. This is why we do it for you. Yeah, and so therefore you have the ability to get into those programs even for the first week for free if you sign up. And you don't want it after a week, that's perfectly fine. But for a week, I sent you the reports and you can look at them, but they're a little complex. So therefore they have an intro where it says, okay, what's that all about here? And a legend, what are those indicators mean? And how do those trade potentials that are orange or pink or whatever look at the chart? Yeah, so that's all explained down there. So if you, and also if you trade on trade colors, so then you have a little worksheet where you can put and select the ones that you want to consider deeper. Yeah, that's for example HF, a day trading alert. So it comes with a sector analysis. Say, okay, this is how the sectors looked after that day. It always has a chart of the spider where the individual signals are spelled out. Yeah, like yesterday we had that buy signal. I said, take it easy, take it on a shorter time frame, and a lot of us think I brought it home. Then you have stocks for day trading if you're interested that have market pressure in the morning. There's another report coming out. Then futures and selected currencies and forex. So you see at the moment market pressure on the Australian dollar. The British pound has moves for tomorrow, so does soybeans and the ES. So those are key instruments you should be looking at. On a lower time frame, on the last hour, the Japanese yen had a move, so looking at the hourly chart. On 4 hours, US Canadian, Euro Canadian, and the Swiss franc had action. Yeah, so that you could be finding on the chart. And these are the ones with continuation pattern. Here is the one listed from up there again, which had more focus. Yeah, Australian dollar, Japanese yen, the carry trade. What's the carry trade? It's just the highest differential between the interest rate of the different countries. I don't want to get into that. We're not doing forex tonight. I'll do that separate. And then there's less common forex pairs that are spelled out in here, like US, Mexican, Great British Pound compared to the Swedish krona. For those who trade those, they all have trade color continuation patterns. Yeah. Classes available currently, yes. Yeah, that's what I see. Yeah. Yeah, I'm open. Yeah, sometimes I'm booked and you hear nothing from me because there's only that much time in the days in spending the time in the market as well. Yeah, so usually the classes are either after market, weekend, or prior to market. Are we trading like European time frame and that? Yeah, there's a lot of traders that love the European time frame, and therefore I'll be up. We'll look at it together. We'll work at that point in time so that you get the gist for a particular that move. What if you are a trader who can only trade 6 to 1 o'clock Eastern? I also have instruments which you can favorably trade there. Do the instruments work there? Absolutely. But this is what we need to work out then in the program of how that all comes together. Alrighty, with that said, here's again how you can reach me, but by subscribing, you already have the address. I hope you liked our tonight's Trade With Me webinar. I try to go in as many details and as little presentation or promotion. And I hope you come on board to learn the way of trading I'm showing here to you because it can change your life. And that's the change I want to make. And I want to make you happy as a client and as a trader.